And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, all my futures family. It's good to see you all. Welcome to the market prep for February the 16th, Thursday, I should say, not Tuesday, Thursday. My name, I think, is John Hoagland. Thanks for trusting me with your time. As always, we're seeking accurate context, good risk management, and always remaining patient in our trading. First announcement, crude oil volume has moved into the April contract. I've changed everything to the April contract. There is approximately a 25-cent premium in the April contract above the March contract, which is something kind of new. So adjust your levels accordingly. I've adjusted the weekly kickoff levels and other levels that are within reach today, I think. A little more work to do to fix all that on the April charts. But again, the volume greater in April. Make sure you're trading April crude today. Opening here in about 15 minutes. Economic data this morning. Fred, I saw and enjoyed my alliteration of the letter D there. Daily data deluge delivers downside direction dive. Dang, boy, has it ever, right? So housing starts and permits probably not that impactful on what's going on in the markets today, but both of them came out slightly lower than expected. Jobless claims, we're looking for initial jobless claims of 200,000, came out a little bit lower than that at 194,000. The continuing jobless claims also lower. The Philly Fed, I think, was a bit of a shocker, showing really a lot of slowing in the numbers here in activity in that region. They were looking for minus 7.4, came out minus 24.3. So there's a bit of a shocker there. And probably the most important number that we saw this morning is the PPI final. They were looking for 0.4, came out 0.7. And that's the month over month. The year over year, 6%. They were looking for 5.4%. From what I'm seeing, this is the largest jump in the PPI since June of last year. So is that going to be viewed as inflationary by the talking feds that we have today? That PPI final, again, month over month, 0.7%, looking for 0.4%, and the year over year at 6%. Inflationary. Meester is speaking right now, as I understand it. 9:30, we have the nat gas numbers. We also have Bullard at 12:30, and 3 o'clock we have Cook. So we do have some talking feds. What are they going to be talking about? They've all been saying they're going to watch the numbers to make adjustments as far as interest rates moving forward. And I think that there's a pretty strong, at least initial trader and investor mindset that this is going to cause higher rates for longer. Stocks were steady to lower before the open. Before the economic releases. Then it's anybody's guess as to what's going to happen and how traders and investors are going to respond to this information. Just looking at where we are in the kind of medium time frame, we're still really range bound. We had a breakout above the bull flag yesterday in the S&Ps. We have a late spike to the upside. All of those nuances are saying we are rejecting higher prices at the very least for now, and it seems to make sense. We did have the dollar pop on the numbers. Last I checked, the dollar index was 103.73. VIX popped also up about 4%, right around 1890. And the yield on the 10-year is back above 3.8%. So We're seeing some adjustments in some of the short time frame or medium time frame treasuries to the upside as far as interest rates are concerned. So I think the trading public, the S&P eating public, is worried about higher rates for longer, at least here before the open again. We have so many markets that are testing critical areas. We're going to see this on the charts. It's going to be an interesting and challenging, as they all are, challenging trading day. Looking forward to make Hogue money. We'll see what kind of ideas we can come up with, so if we can make a little bit of money there. But up until this point, we've been seeing hints of inflationary numbers coming out, and I think the investors have largely taken that in stride. Again, we're still range bound in the equities, not looking at any big downside moves off of this here, at least just not yet. And again, we'll see that in the charts here shortly. Gold prices continue to hold critical support, at least the last time I checked. Let me take a quick look here. That weekly kickoff level, 1842, continues to be kind of magnetic. It's trading there right now. We got to see if we can bring in new business to the downside. We lost open interest in gold yesterday. Volume was low yesterday. So again, we need to see some changes. We need to see some participation from longer time frame traders from this level. So, okay, Dan Trader is talking about what Meester is talking about right now. Thank you for putting that in, Dan. Meester talking about Fed rates must rise above 5% and remain there for an extended period of time. Maybe not brand new information, but I think that they're, at least the more hawkish ones, are going to be speaking a little bit higher rates for longer, kind of what Meester is talking about. I don't think 5% is necessarily an increase in what the expected high is going to be. All right, let's take a look at what else we got. Oh, crude prices remain also range bound as the April becomes the front month, as always. Make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel. You get notified when we do go live. After the prep this morning, we do have Make Hogue Money. There is the link so you can join our Zoom meeting, so you have the opportunity to vote. You can watch it on YouTube, of course, and I do keep an eye on both chat rooms to kind of talk about what some of the trade ideas that folks are coming up with are. And we've already looked at the VIX, the dollar index, and the 10-year. Good afternoon, everybody. Remember, April crude today and Make Hogue Money after the prep here. Good morning, Brian. First in the room. Rick, my brother, good to see you. Looking forward to seeing you in Make Hogue Money as well. Tachion's back with us today. He stopped by last night to watch the market reflection. It's good to see you, Tachion. Good to know you're still in the fight. And I know you're working, and I appreciate you stopping by and saying hello when you have the chance. The Rooster, good morning. Shaw, happy Deluge Thursday. Dang, schmang, trade what you see. Absolutely. Absolutely. Rob T. Dimitar, Ainsley, George, good morning. Lacey's under the table here, keeping my feet warm this morning. Charles March, good morning. Denise, good morning. Daryl, Stephen, Tachion. Did trade all those months, but didn't get time to watch the tube because of work constraints. Well, got to take care of business. I'm proud of you, Tachion. And again, thanks for stopping by when you have the chance. Bill, Dan Trader, Fred, timely title alliteration taunts traders. I love that, Fred. I knew somebody was going to appreciate that title. Sonny with a quote this morning. Welcome back, Sonny. I don't know if I've seen you in a while. Thank you for bringing the quote back as well. The only way to do great work is to love what you do, Steve Jobs. I must love what I do. I've been doing this for so long, and it's getting better and better all the time because I get to spend time talking trading with traders. I just love that. We used to joke when we were trading in the pit. We'd be at a party, and in the pit we were all standing in a circle yelling at each other, and we'd end up at a party standing in a circle yelling at each other. Sarah Hall, good morning, prayers and love to you. Good morning, Vince, my guy. Terry King, Sujit, Shai Tran, good to see you. Anissa, Mark, good to see you. Currently working slow and building skills of patience, persistence, discipline, and confidence. Definitely good skills and something we're all working on for our entire journey here as traders. ES took the stairs up, taking the elevator down. You're not kidding there, Mark. Not kidding. Andy, Scott saw and he conquered. Will R, good morning, JT. Observer status today. That's okay. That's all right, JT. There's, not having a position, doing what you're doing, being deliberate in your practice is going to help you. Jason Lewis, Alejandro Philip, dollar rallied off the numbers according to Rick. Pablo, Warrior, good to see you. Been shorting bonds the last month. Probably not a bad idea. Finally getting paid. Sarah Hall, did we create a bear flag on the daily S&P while daily MACD goes negative? We'll take a look at that, Sarah Hall, on the daily here shortly. Fred, Make Hogue Money is fun and educational. Good. I'm glad you like it there, Fred. I hope you all do. Rusty Golfer, my spirit animals, with us this morning. Nicole, good morning with the VIX today. Last I checked it's 1933. That's a delayed quote, though. Still below 20, right? Chad got slammed trying to buy the base of the late spike from yesterday in pre-market. That's one of the rules about that late spike is you got to wait and see how the market opens in relation to the late spike. We'll go over those rules again today. Jason, good to see you. Nicole, be present. Orion. Thank you, Orion. Thank you very much. That's great, man. I appreciate that. NASDAQ. Jerry is awake. Hopefully I am too. Fred, standing in a circle yelling at each other. It always seems to be the way, right? If you have a party at your house, everybody ends up in the kitchen yelling at each other. Observer status is also a position. Absolutely. Yeah, problem with bull markets is it's uphill the whole way. There's two different auction processes. There's the English auction where where buyers compete to buy it by pushing price higher and higher, and then there's the Dutch auction where they put the price too expensive and lower it and lower it and lower it and lower it until somebody says, "I'll take it for that," and that's the end of the auction. Seems to work in futures too, in lots of things. When the market's going up, it grinds. When it's going lower, it falls. Hey, Nicole just started a combine, up $70. Nice. Very nice, Nicole. Glad to hear you're with us. Check you out. Well, check us out every morning on the Market Prep, and we'll be looking forward to your success. Anybody who has any degree of success, make sure you tell us. You succeed in step 1, tell us. Step 2, tell us. Doing well in the funded account, tell us. Not doing well in the funded account, tell us. Yeah, that's it, Chad, right? All right, we're going to jump into the charts pretty quickly here. We got Make Hogue Money here as quickly as we can after the prep. So here we go. There's the daily in the S&Ps. Where are we? Do we have a bear flag now? Sarah, when I'm looking for some kind of a flag, whether it's a bull flag or a bear flag, I'm looking for price to come up to or down to that level. I'm viewing this as more of a range-bound area. So if we were looking for a bear flag, I would expect price to come down to it, and then we have smaller range, low volume moves to the upside, and then a breakout to the downside. Now, that said, it doesn't mean that this trend line from here to here to here isn't going to be impactful or important. All right? So what are we looking at here? We are in short time frame balance, medium time frame upside. We're not doing a very good job of moving to the upside. We've fallen into balance, and that's going to do pretty well to even out inventory, but we're not seeing good continuation. No acceptance above the December high of 41.80. We've checked it a few times. We just can't seem to get there. We've had a potential breakout of a bull flag, which now has failed. We had a late spike yesterday. Economic data. What is the grade that I'm giving the attempts at moving higher? A C minus, because it's not a D or an F, because we're still range bound here. Take a look at the 30-minute chart. So let me get the trend lines on here, the right spot. So here's our late spike yesterday after finally showing a potential acceptance above this trend line. So that the late spike, this trend line, those are both important nuances for us today. We've opened or are going to open with really high probability below the base of the late spike or even the start of the late spike. We've now fallen back down below this trend line, which is the first time we've been able to close above it. Does that change that trend line? I'll have to take a look. But we've got higher highs, not necessarily higher lows. So this kind of trend line right here does seem like it might be impactful, Sarah. If we were to put this here, I mean, we've got 1-2 points of contact here. And we're now down below that. I'm not going to put that on the chart here just yet. So what happens? Well, we know we've got a lot of short inventory in this, probably shorter time frame sellers pushing price down below. The nuances. We have the late spike. We're opening below the late spike. Another nuance. We're opening below this trend line. Where this is going to get complicated is we don't have, or probably will not have, with a great degree of probability, the opportunity to come back and test these levels from the other direction, at least not today. We're one time framing lower prior to the open. We have naked point of control to check here. We've got last week's low all the way down here. We've got the low end of the potential bull flag all the way down here. There's room. There's room. So, but the fact that we're opening, well, I mean, the fact that we're opening with a gap is going to probably be helpful for us. If we can't close this gap relatively early in the session, we'll look for the market to continue the push to the downside. I think there's a pretty good fear of higher rates for longer from the information we got today. And the information we got all week has been somewhat inflationary. So I think we're going to have some pretty hawkish Fed members coming into this next meeting, which is first or second week in March. Here's the TPO chart. I keep yammering here. So here's our overnight. Here's our late spike. Here's the base of the late spike. Here's where we are. So already showing rejection of higher pricing. The trend line, we open with a gap below and can't close the gap. We'll look for continuation to the downside. If we close the gap, get back into value from yesterday, that may give us an opportunity to come back near that trend line, to come back to the start of the late spike or the base of the late spike. We've got to see if we open with a gap. If we can't close that gap, we look to go in the direction of the gap. If we close the gap, show signs of reacceptance inside range or value from yesterday, then things change for us a little bit. It's going to be an interesting make hog money and an interesting trading day. Here's a crude oil range bound, rollover range bound. We are now trading the April contract, which again is approximately a 24-cent premium to March. So adjust your levels. We're range bound. We're losing 13,000 in open interest. Oh, shit. Pardon my French, but I did want to mention, if we were to hold above the opening, the late spike, we added some longs yesterday. 24,000 new longs in the S&Ps on what I would call a normal variation, but somewhat of a trend day. Splitting this profile, we moved higher and higher throughout the entire session. We did not have any delta divergence, but we just ended up ending with a spike. So we have quite possibly trapped some new longs up here, which may be part of the reason we're getting barreled to the downside so quickly today. Okay, enough about that. Crude oil, we lost 13,000 in open interest yesterday, but that's very blurry again because we are in rollover. Balance rules apply. This week's low, this week's high. I will be focusing on those levels to do anything probably today. It's switch day. Rollover trading is difficult. We traded down to this point of control a couple days ago. We got another one up above. Do we have any overnight inventory? I'm going with no, not really. We're opening in range and in value. Look what we did yesterday. When I talk about opening in range and especially in value, that the better trade locations are likely to come later on in the session. Just look at yesterday. We opened in range below value. We rejected value. We put in a low. Best trade location of the day was 2.5 hours into the session. And then we rotated higher and put in the high. All of this happened after the first 2 hours of trade. So here we are again. We've just opened in range and in value. Probability states that we're probably going to see better trade location as the day goes on. I'm not sure if we have our opening range on this. Here's the opening range. Opening range is the low of the session so far. Something to keep in mind. If that remains, I'm going to be looking for longs. Here's the NASDAQ. Oh, we didn't do the TPO chart here. Normal variation trading day. Initial balance penetrated on both sides. Point of control centrally located. Neutral day. It makes sense. It's rollover. NASDAQ. So the NASDAQ, while the S&Ps added a whole bunch of open interest yesterday, the NASDAQ did not. It was largely inert. It just added a couple of hundred contracts. But the NASDAQ has been representing as stronger than the S&Ps. As a matter of fact, I don't think we've necessarily broken the trend line on the 30-minute chart that takes us back into the bull flag. We are, however, retesting this level here, this trend line. We looked below it a couple of times. We got lots of points of contact on this, and we are putting another point of contact on it as we speak. Upside success, giving it a C minor, the same as the S&P, is maybe a C because it is a little higher. This is the December high that we're still wrestling with getting above in the S&Ps. So, NASDAQ, balance rules apply. Balance rules apply. Here we go. Here's the 30-minute chart. Let's get these trend lines on here correctly. So there's our breakout, which happened yesterday in the day before yesterday in the NASDAQ. Late spike, again, opening below it. Maybe not opening with a gap here in the NASDAQ, but the NASDAQ has been presenting as stronger. This could be viewed, as Sarah has pointed out, as a bear flag. But again, when we look for price to come down to a bear flag, go in the opposite direction, and then continue the move down. Are we doing that? Kind of. And Sarah Hall, you may be really onto something on that. All right. Take a look at the TPO chart. Here's our late spike, our rejection thereof. Again, a normal variation day, IB, the low of the session. Again, more of a trend day than a normal variation day. We kept putting in higher highs and higher lows, higher highs, higher lows, put in the high right at the end of the day. We didn't add any open interest though, so there's less of a probability of a whole bunch of trapped longs up here. So we'll watch and we'll see if we open with a gap, if we don't open with a gap. There's such conflicting information all week from the NASDAQ and the S&Ps. One adds open interest one day, the other loses it. Just kind of crazy. They're so related yet so different. Here's the gold. Looking here, another test below the weekly kickoff low, showing you signs of rejection below that. What these weekly kickoff levels are meant to do is show us where longer time frame participants may need to or be forced to adjust inventories and enter the market in bigger ways. So far, we have not seen that. We lost 2,600 in open interest yesterday on lower volume. Seems nobody cares down here. It's less likely for continuation in that case, but that can change at any moment. What we're looking for and what shorter time frame shorts are waiting for is the longer time frame to start to bring in new business to the downside here in gold. We keep seeing the dollar creeping to the upside. There's a higher probability of that, but we're just not seeing it here just yet. I'm giving the downside move here a C. A C after breaking out of a bull flag. We're getting a C. Take a look at the 30. So there's our move after the 730 numbers. We're right back to where we were. No overnight inventory, in range, in value, very small range yesterday. We have more recent visuals higher. We've got a gap that we have not yet filled in regular trading hours from the day before yesterday and the day before that. Naked points of control. Nothing really too impactful. We've got this naked point of control up here. This move to the downside, while it has been weak, has been relatively organized until yesterday. So I'm just watching here. I'm watching this weekly kickoff level. We put in a lower low. We put in a higher high in the overnight. These are going to probably be levels I'll be watching. What to do? Here's the TPO chart. Yesterday, initial balance the high, excess at the low, poor high, gap, points of control. We got a little bit of excess on this low now, below this excess. So it looks as though downside auctions are being completed. I'm looking for this market to really pull back a little bit. If I find a good entry, I may think about doing that. Here's the euro, still very range bound, losing 3,000 in open interest yesterday. Again, it seems like nobody cares at this level, which is not good for continuation to the downside. Again, I'm giving this a C, C minus, maybe even a D for downside continuation. We need new business below these lows. So my focus is really going to be on last week's high and low. Last week's high and low here and here for longer term opportunities. And I'm not going to be trying to trade in the middle here. We're pretty close to the last week's low here. But again, I'm not seeing that there's enough interest in this market really to try and trade it. Here's last week's low. We looked below it yesterday, closed back above it. Overnight check to close this gap, but we still haven't done that in the regular trading hours. The market has now opened back inside value from yesterday and taken care of any overnight inventory. So we're starting over here in the euro, and last week's low looks kind of interesting. Equities will probably roll the first week in March. We're getting there. First, we've got Treasury rollover before that. Speaking of Treasuries, our downside move is actually getting a B here for us. 3-day test of the weekly kickoff low. We're below it now. We lost 8,200 down here yesterday. If we start building volume and showing time and momentum acceptance below this level, there is a lot of space down here. Okay, this market is moving lower because of a lot of expectation of higher rates. This market needs new sellers to continue. Has it found them? Okay, 730 bar below. I'm still thinking that I want to look for opportunities to sell strength in this market, especially below weekly kickoff low. Here's the TPO chart. Well, look at all the excess we had a couple of days ago. Yesterday, no excess on either side of the profile. Normal variation day. IB extreme at the high. Ledges on both sides. No acceptance. No finished auction on either side. So I'm going with the excess high here, looking for opportunities to sell strength as we think rates may be increasing. Here's the natural gas. Balance. Range bound. Choppy. Consolidating. Adjusting inventory. Whatever you want to call it. Here's the 30. Overnight inventory a little bit to the long side. We did have a late spike yesterday. We've opened above the late spike, marking possible rejection of lower pricing. Here's that spike. We've opened above it. Rejection of lower pricing. But it was range bound as we are. Wouldn't surprise me. Upper extreme, lower extreme, anything can happen. All right. So hopefully there's a little bit of help in there. Sometimes these markets offer really good high probability opportunities. Unfortunately, the markets have kind of moved in that direction in some of these markets before the open, and we do have some decent opportunities. But we're not trying to call trades here. We're not trying to be right. We're just trying to find good context, and I think we do a pretty good job of that. So, all right, let's get ready for Make Hogue Money. Take your deep breath. Let's be humble, grateful, creative, and centered in our trading today. Looking forward to seeing everybody for Make Hogue Money. I'm going to put that link in here for the Zoom meeting again here. There we go. And we'll look forward to seeing you then. If not, I will see you tomorrow morning. There's no reflection on Thursdays. So it's Make Hogue Money, and then tomorrow morning will be Friday, the prep. And then we'll be ready for another weekend. Boy, these weeks just continue to fly by, and that's okay. It's February. Have a great trading day if I don't see you, and God bless. Say a prayer for peace. Be kind to yourself. Be kind to others. Get out there and profit.